Welcome to the Deep Dive. We cut through the noise around earnings calls to get you the insights that really matter. Today, we're digging into Chipotle Mexican Grill's recent Q2 2025 results. We've listened to the call, read the reports, and we're here to break down what you need to know about their performance, strategy, and what management's signaling for the future.
Exactly. We're going beyond just the headlines. The goal is to give you that clear, investor-focused view of where Chipotle stands, what's really driving their numbers, and where they might be heading next, quickly and clearly.
Okay, let's jump right in. Can you give us a quick snapshot of those headline numbers for the second quarter?
Sure. So for Q2, Chipotle reported sales growth, 3% growth, reaching $3.1 billion. But the number that probably caught most eyes was a 4% decline in comparable restaurant sales. So definitely some pressure there.
Right, a 4% drop is significant.
Yeah. Digital sales, though, held up pretty well. Still strong at 35.5% of total sales. Restaurant level margin came in at 27.4%. Now that's a decrease of 150 basis points compared to last year.
Okay, so margin pressure too.
And adjusted diluted EPS, earnings per share, were 33 cents. That marks a 3% decline from Q2 last year. On the brighter side, they opened a record 61 new restaurants. That's a quarterly record for them.
Wow, 61.
And notably, 47 of those new locations included a Chipotlane, their drive-through format.
Okay, so like you said, definitely a mixed bag on the surface. Record openings are great, but that comp sales decline and the margin pressure, it raises questions. What did management say was driving this, especially that slowdown?
Well, management pointed pretty directly to a slowdown they saw in underlying transaction trends, specifically in May. They linked this quite heavily to a dip in overall consumer sentiment around that time. You know, people feeling the pinch.
Right, the macro environment.
Exactly. But, and this is crucial, they really emphasized a reacceleration in June. They saw positive comparable sales and transaction trends return in June, and they said the positive momentum continued into July.
Okay, so a quick turnaround then. What did they attribute that bounce back to?
They credited their summer marketing initiatives, specifically things like the launch of their new Adobo Ranch dip and a big loyalty program push called Summer of Extras.
Ah, okay, that's where it gets interesting. It wasn't just sitting back and waiting. Tell us more about those initiatives. Was this just standard summer stuff or something more strategic?
Oh, definitely seemed more strategic. Take the Summer of Extras loyalty program. It wasn't just discounts. It was this gamified 3-month thing with extra points, badges, prizes. They got about 5 million participants engaged. And importantly, it drove a 14% year-over-year increase in new loyalty signups.
5 million is a lot.
It is. And the key thing they stressed was its focus on re-engaging low-frequency users. About 2 million of those 5 million were in that category, and they saw frequency pick up across the board.
So like a targeted win-back campaign using loyalty?
Clever, precisely. And on the menu side, that Chipotle Honey Chicken LTO, huge hit. It became their highest incidence limited time offer ever. Showed up in 1 out of every 4 orders placed while it was available. They definitely plan to bring that one back.
1 in 4. Wow. Okay.
And the Adobo Ranch dip, their first new dip in like 5 years apparently, drove incremental transactions right away. They also mentioned a social campaign, tatted like a Chipotle bag BOGO. Sounds a bit wild, but it generated over 100 million social impressions.
Seriously, a tattoo promo?
Yeah, apparently. Even though the BOGO offer was just for an hour, it doubled sales during that time and had this big, media halo effect afterwards, boosting digital traffic. So all these things together, it really looks like a deliberate shift to fight that summer slowdown they'd seen in the past couple of years.
Fascinating. So they're really leaning into digital loyalty and menu innovation to drive traffic, actively tweaking the playbook, but, more digital orders, more complex LTOs. That puts pressure on the restaurant teams, right? How's the operational side holding up?
Good question. They talked quite a bit about that. Operationally, they're seeing benefits from some key back-of-house projects finally getting rolled out. For instance, they've finished putting produce slicers in all their restaurants now.
Produce slicers? Seems small.
It sounds small, right? But think about scaling that efficiency across thousands of locations. It frees up prep time, helps teams get ready for peak periods, improves labor deployment. It adds up.
Right. Consistency and freeing up staff. Makes sense.
And that's not all. They started rolling out what they call their high efficiency equipment package, or HEAP.
HEAP. Okay.
Yeah, HEEP. This is a bigger deal. It includes things like dual-sided planches, grills for faster cooking, bigger 3-pan rice cookers, high-capacity fryers. They've only got about 40 installs done so far. It's early days. But the whole idea is to make Chipotle more scalable.
How so?
Well, the aim is better culinary consistency, better prep efficiency, and crucially, faster throughput, getting people through the line quicker, which is huge for their model. Management actually anticipates getting about 2 to 3 hours of labor efficiency per restaurant per day, just from HEAP.
2 to 3 hours a day. That's massive when you multiply it out.
It really is. They plan to roll this out over about 3 years to existing restaurants, and all new restaurants starting in Q4 this year will get it from day one. They even mentioned a new innovation space they've opened to test things like augmented digital make lines. So they're thinking longer term about operational tech too.
Wow, that's a serious investment in the nuts and bolts. And speaking of new restaurants, that record number of openings, what's the bigger picture on expansion? Domestically and internationally?
Yeah, they are definitely pushing growth. Like we said, 61 new stores in Q2, 47 with Chipotlanes. They're still on track for their full year target, opening somewhere between 315 and 345 new restaurants in the US and Canada this year.
And most of those will have the drive-through lane.
Yep, about 80% are planned to include a Chipotlane. Longer term, they're talking about 8% to 10% annual new unit growth. And they reiterated their confidence in eventually reaching 7,000 restaurants just in North America.
7,000? That's a big number. What about outside North America?
Well, Canada has been a real bright spot. They said the business there has nearly tripled in the last 5 years. They've got 61 locations now, and they're performing pretty much on par with U.S. stores.
Impressive.
In Europe, it's maybe a bit slower, but they feel positive about consumer feedback. They see potential for hundreds of restaurants in places like London and Germany, maybe thousands across Western Europe eventually. And their Middle East partnership with the Al Shaya Group seems to be ramping up. They mentioned strong performance in Kuwait. One store there apparently beat the U.S. average unit volume in its first year.
Really? Better than the U.S. average?
That's what they said.
Yeah.
And their first location in Mexico with the Ala Group is slated for early next year. So yeah, broad global ambitions seem to be back on the table.
Okay, but scaling that fast, especially globally, that takes more than just capital, right? It takes people.
Absolutely. And they spent some time on this. Management really emphasized their focus on people leadership. They highlighted their roughly 80% internal promotion rate. They see cultivating talent from within as like fundamental to their ability to scale successfully.
So promoting from crew to manager and up.
Exactly. They gave an example. Their Canadian team director started as an apprentice GM in Texas 23 years ago, worked his way up, and now he's a key leader developing other leaders in Canada. They see this internal pipeline as absolutely critical for opening thousands more restaurants while maintaining their culture.
Interesting. That internal development angle is key. Okay, let's shift gears a bit. Thinking about investors. Management pointed to the macro environment, the low-income consumer pulling back. Is that the whole story for the Q2 slowdown? Or could there be other factors, maybe competitive pressure they didn't emphasize as much?
That's always the question, isn't it?
Yeah.
They definitely acknowledged seeing some market share loss in April and May. They attributed it to that lower-income consumer looking for value, potentially going to cheaper QSRs, the ones pushing $5 meals. But they were very quick to point out that they regained share in June and July. They see that as proof that the core appeal is still there. So their narrative is basically Q2 was tough due to really difficult comparisons to last year, plus that temporary dip in consumer confidence, not because of some fundamental flaw or a new competitor stealing their lunch money permanently.
Okay, so they think it was temporary pressure, not a structural shift away from them. But with all those $5 meal deals out there, are they worried they aren't getting credit for their value? Is $10 still seen as value?
They actually addressed that pretty directly. Management admitted, quite frankly, that they probably aren't getting enough credit for their value proposition right now. Their argument is, you get this handcrafted, pretty substantial meal made with real ingredients for around $10. They believe that's a significant discount, like 20, 30%, compared to other fast casual auctions, and sometimes even better than QSR combo meals.
But perception is reality, right?
Exactly. So their plan isn't to jump into price wars or start heavily discounting. Instead, they want to focus on communicating that value better, highlighting the quality ingredients, the cooking techniques, the portion sizes, the speed. Basically, lean into what makes Chipotle, well, Chipotle. They feel they need to tell that story more effectively.
Okay, so focus on reinforcing their brand strengths rather than competing purely on price. Makes sense. So how does all this, the macro uncertainty, the marketing pivots, the operational investments translate into their financial outlook? What are they guiding for?
Well, reflecting that uncertainty, they updated their full year comparable sales guidance. They now expect it to be about flat for the year.
Okay, pulled back from previous expectations then.
Yes. But they stressed they remain very confident in getting back to mid-single-digit comp sales growth longer term. And they still see a path to exceeding $4 million in average unit volumes, or AUVs.
And what about margins? That 150 basis point drop in Q2 was notable.
Right. But they actually said they've more than offset the investment they made in portion sizes last year. They did this through supply chain savings and other efficiencies in the restaurants. Net-net, they think they've gained about 30 to 40 basis points on their cost of sales line because of those efforts.
So efficiencies are kicking in?
Seems so. And they expect restaurant-level margins to actually increase in the second half of the year. They're anticipating getting back into that 29-30% range as AUVs climb towards that $4 million target. Plus, they have a very strong balance sheet. $2.1 billion in cash, no debt, and they're actively returning cash to shareholders. They bought back $436 million of stock just in Q2. Year to date, that's nearly $1 billion in buybacks.
Okay, strong balance sheet, share buybacks, confidence in the long term despite the near-term guidance cut. Got it. All right, let's move to our favorite segment. This is not financial advice. Based on everything we've just discussed from the call, hit me with a wild but, plausible trade idea.
Okay, not financial advice, of course. But here's something to think about, playing off their narrative. A long-term pairs trade. Go long Chipotle, CMG, but at the same time, short a basket of those value-focused QSR competitors.
Interesting. Long Chipotle, short the cheap guys. What's the thesis?
The thesis is this. Chipotle is making these significant multi-year investments. The Heapy rollout, the slicers, all the back-of-house stuff. Plus, they're getting smarter with digital engagement, like Summer of Extras and plans to win back lapsed users. You combine that operational leverage with their strong brand. The argument is the market isn't fully appreciating this long-term potential, especially while focusing on the current macro headwinds.
Okay.
So while right now consumers might be flocking to those $5 QSR meals, something Chipotle admits is happening that might not last. Once consumer confidence ticks up, or once Chipotle successfully retells its value story, that premium fast casual segment where Chipotle leads is likely to bounce back strongly.
And the short side?
Simultaneously, those value-focused QSRs. They might face margin pressure trying to keep prices that low, especially with inflation still a factor in their costs. They could lose some of the temporary share gains they've enjoyed. So the pairs trade hedges against general consumer weakness, but bet specifically on Chipotle's operational improvements and brand strength driving outperformance over the medium to long run.
A bet on Chipotle's execution and brand resilience versus potential margin squeeze at the low end. Okay, I see the logic. Definitely plausible, definitely not advice. All right, let's recap our deep dive on Chipotle's Q2. Clearly, they hit some bumps, mainly from the consumer environment, which led to that negative comp sales number and the revised outlook for the year.
Yeah, but the key takeaway seems to be their response. They detailed significant operational changes, like Heap starting to roll out, and marketing initiatives that already seem to be bearing fruit, given the positive trends they reported for June and July.
Plus, that strong focus on developing internal talent, the push on international expansion, and using tech for efficiency and engagement, it points to a pretty clear long-term strategy.
Exactly. They sound confident they can get back to that mid-single-digit comp growth and hit those strong margin targets once things stabilize a bit and once they nail that value message.
So a company facing challenges but actively deploying a multifaceted plan. As always, remember everyone, this discussion is just for informational purposes. It is absolutely not financial advice.
Please, do your own research. Consider your own financial situation before making any investment decisions.
And before we wrap up, here's something to think about. We talked about their people strategy, that 80% internal promotion rate, with these huge global ambitions. Could that focus on cultivating internal leaders, that specific Chipotle culture, actually be their biggest, maybe most underappreciated competitive advantage for scaling worldwide? Something to mull over. We'd love to hear what you think about Chipotle's quarter. Until next time, stay informed.